Today we are diving into a topic that is shaping global politics, economics, and the future of entire industries. In 2025, the balance of power between Europe and China is shifting, and not in Europe's favor. We will break down why China is gaining influence, why Europe is losing, why Europe is struggling to keep up, and what this power shift means for the coming decades. Structural advantages, how China built its lead. To understand why Europe is weakening, we have to start with the fundamentals. China's manufacturing dominance. China has spent the last 2 decades building the world's largest industrial base, the world's largest workforce, the world's largest supply chain ecosystem. This makes China incredibly efficient at producing everything from electric vehicles to solar panels to electronics, at price Europe simply cannot match. In 2025, the advantage only grew. China continues to produce goods at the scale that makes competition extremely difficult for European factories. Control over critical raw materials like lithium, cobalt, rare earth elements, battery components, photovoltaic materials. Even when Europe tries to expand green technologies, it still depends heavily on Chinese supply chains. The structural advantage means Europe cannot quickly become independent, and China knows it. Trade balance: Europe buys, China sells. Europe's trade relationship with China is increasingly one-sided. The EU imports far more from China than it exports. This creates a massive trade deficit that weakens European industries and makes the European market a passive consumer rather than an active producer. Chinese EVs and green tech flooding Europe. Chinese electric vehicles, batteries, solar panels, and electronics are entering Europe at record rates. They are cheaper, produced at greater scale, and heavily subsidized by the Chinese government. Europe companies, especially in Germany and France, are sounding alarms. Many fear they cannot compete long-term. European factories shutting down or moving because of higher production costs in Europe. Some companies are relocating manufacturing to China. Others are downsizing. Some are closing entirely. This means fewer jobs and less industrial strength inside the European Union. China's geopolitical leverage. China's influence isn't just economic, it's political. Beijing uses its economic strength as leverage in diplomacy. In 2025, China increased its political outreach to Europe through investment, strategic partnership, energy and infrastructure deals, and diplomatic visits. Europe's internal divisions helped China. European countries often disagree on how to approach China. Germany wants economic cooperation, France pushes for strategic autonomy. Eastern European nations vary widely in their stance. These differences give China room to negotiate one-on-one with individual nations, gaining influence without facing a unified European front. China acts long-term, Europe reacts short-term. Europe, with its frequent elections and shifting coalitions, often cannot sustain long-term geopolitical planning. This mismatch makes Europe appear weaker and less coordinated. Technology gap: Europe is falling behind. China's rapid rise in technology is another major reason Europe is losing ground. Innovation and investment: China invests massively in artificial intelligence, battery technology, electric vehicles, robotics, quantum computing, biotechnology. Europe, on the other hand, struggles with fragmented markets, slow regulations, low risk tolerance, and limited venture capital compared to China or the US. The EV and battery race is already decided. Chinese companies dominate global EV manufacturing and battery production. Europe is trying to catch up, but China's head start is enormous and growing. EU response too slow, too reactive. Europe is aware of the problem, and in 2025 it began taking action. New regulations on critical raw materials, subsidies to green technology, new trade investigations into Chinese subsidies, plans to reduce dependence on Chinese import. However, these measures face problems. They take years to implement, they are expensive, European industries are already weakened. Many regulations cannot compete with Chinese scale of state support. Internal EU politics slow everything down. For any major EU decision, 27 countries need to agree, which takes time and often results in watered-down compromises, while Europe debates, China acts. What this means for the future? If current trends continue, Europe risks losing global industrial leadership, becoming increasingly dependent on Chinese imports, losing jobs in key manufacturing sectors, and losing political leverage on the world stage. China, meanwhile, gains stronger economic influence in Europe, greater control over global supply chains, more political power worldwide. This doesn't mean Europe is doomed, but it does mean it needs bold change. Conclusion: as for 2025, turning point is shaping up to be a year of transition. China is rising faster than ever. Europe is facing challenges it cannot ignore. The question is, will Europe adapt and rebuild its competitiveness or continue failing behind? Only time will tell. If you find this breakdown useful, hit like, subscribe, and let me know in the comments what part of this global shift you want to explore next. Bye bye.